Hey guys, welcome back to the Smash Property Podcast. Today's episode is all about how to value a property so that you don't overpay. Now, valuing a property is not an exact science. It is part data. It's also part psychology, right? There's a human involved in the process. And if you get one of those sides wrong, you can end up overpaying for a property unnecessarily. So this episode is going to teach you why relying on online estimates can lead to potentially you overpaying for a property. You're going to also learn about how to mix data and real life human context. And you're going to walk away with a practical framework that you can use to value any property without you being a valuer, and learn when it's okay to potentially stretch beyond fair market value and get yourself a deal that you've been looking for. That and more coming up in today's episode. But before we get into it, welcome back, Akira.
Hello.
How are you?
I'm doing good. I feel like the last few weeks has just been you soloing. I love them.
Yeah. Doing the solo potties. It's good to have you back, and it's nice to have your hair crimped, locked and loaded.
Big and bushy.
I had to get that one in there. But tell it, what have you been hiding in a hole? Have you been climbing Mount Everest? What have you been doing?
I've been deal hunting.
Deal hunting. Yeah.
Very deep in deal hunting phase, which has been really fun.
Yeah.
I feel like a lot of people coming into end of financial year, you can feel the motivation from people trying to get things in within the next couple of weeks.
Yeah.
It's interesting. Even on the builders side and contractor side, you hear a lot of that, just trying to scram things through for tax.
Yeah. It is a busy time of year. That's for sure.
But it is a very fun part of the business, the deal hunting. It's a great time to be in the market. Obviously, interest rates have come down. There's a lot more, I guess, buy incentives that has come in. And you're seeing that firsthand on the ground, which is good.
Yeah, people are a little bit more confident now that the rates are starting to come back down and all that sort of stuff. It feels like yesterday, honestly, when the rates started to go up, and I remember you and I going like, shit, are we going to be able to are we going to hold this properties? How high is it going to go? And now look, we're on the other side of it.
It's so funny. The flip side, when it comes, and you do your numbers and start understanding where it could go, how quickly it changes the scenario.
Yeah,
100%. Drops.
Yeah, actually, we might talk about that in another episode. Holding through an interest rate cycle, and that's
a good one.
That's actually really
good.
Note that down.
Yes, I will.
So this one is interesting, and I think actually a really important episode because after all, who wants to overpay for a property, right? Whether you're doing it yourself or whether you're a BA or going with a BA or whatever, it's a real interesting one, and one that you and I often, we have debates over, like when we're putting an offer down, whether it is the right price or not. So I think it is important. It is not an exact science. I think I said that in the intro, because you can look at every comparable sale, that is, you can look at every online estimate, but that is only telling you part of a very big story. And we're going to unpack a little bit about how the listeners can, for themselves, on their own, work out what a fair market value price for a property is, because data is one thing, the human side is the other, and it tells a very big picture. And quite often, as you found, it actually tells an even better story than some of the data that we get. So data shows the facts, people show the story, I think is a good way to put it.
Very true.
So numbers tell you kind of what's sold and when, and people reveal why it's sold. And this is where you actually kill it as a BA, because you kind of just, somehow it'll just get
me the answers.
You get in there. So talk to us a little bit about, when I'm probably the data side of the fence and you're the human side. I'm the robot, you're the human when it comes to the business. And I can give you a comparable sale, and hey, this is all the data we've looked at. This is the growth of the area in the past quarter. But it sometimes falls short.
Yes.
So talk to us a little bit about the human side of the fence.
Okay, I think maybe to answer your question, I'll just give some context on it. Now, importantly, properties are not apples for apples. Properties are like people. I always think You can have very similar people, but no two properties are exactly the same. There's always going to be a variance. So when I take two properties that are of similar configuration, similar land size, in a similar area or in the same area, ideally, what you want to look for are basically the points at which they differ. So often, you can see past sales and it's like 50K less, but how long ago was that offer made? So understanding that firsthand is very important. I think also, to your point, the human side, this is where asking the questions, okay, why is that property so much cheaper than this one? This is where you need to obviously speak to agents, understand the backstory on past sales, maybe be in a scenario to give you confidence to make an offer. I know for my personal situation, when I'm comparing two properties, I'll figure out, all right, what are the pros and cons of this deal versus another deal, and then weigh up what is the better option and what the right price is. So speaking to the agents is, number one, from my point of view, a key element to understand values. Secondly, property managers as well. That will then give us, I think, an understanding of boots on the ground, someone managing the property, what they can expect. Things like, is it a distressed sale maybe? Maybe that has, I guess, an effect on the property being sold quickly. Often like large estates or separations can mean, all right, we don't really care about the price. We just want this property gone. So those types of things could give you a bit of, I guess, a clue on why values differ between similar properties. Over and above that, I would say things like investors versus owner-occupiers being another element to it. Often investors will look at the numbers when they're placing a bid on a property, whereas emotional home occupiers want a home to live in. So the numbers on the rent don't really matter. So understanding all those variables when you're comparing past sales, recent sales, is important to understand the key of what you can then, I guess, offer on a property that's similar.
Yeah, so I think the takeaway is you've got to read between the lines as it relates to the property that you're looking at. Floor plans differ. Different sides of the street can sometimes offer different types of tenants, and therefore, obviously, that can have an effect on price. Like I said, layouts, floor plans, bush and flood overlays. Yeah, exactly right. Maybe the property has had undergone a renovation, either pre or post purchase, which has impacted price. And to your point, I think it's a very important point. People often forget how quickly markets can move. And I've mentioned in many other videos that a lot of markets can move 10 grand a month, right? So if you're looking at a property 6 months ago and you're wondering why it might be 50, 60K cheaper, well, hey, because it's gone up in value that much, even though it might be like for like exactly the same.
Actually, on that's a really important point that I often come up with in terms of going through questions and answers with clients is, recent sales from 2 months ago. That property had an offer on it like maybe 3 or 4 months ago. Yeah. So the market was very different pre-interest rate drop as 100%. Well. So all these little things compound to give you a different position now in real time.
One thing I'm not sure if we have mentioned is the building and pest might have come back. Well, I mean, we've seen properties that with a 50K reduction on its final price, right? So that's stuff that's not publicly available. You're not going to know that. Even if you talk to the agent, you're probably not going to get that level of information. Yes. But understanding and putting it into context, I think, is important.
Yeah, 100%. I know we're moving off the framework slightly of what we discussed, but I think another important point as well is the property tenanted and at what rent?
Yeah.
What I find, especially in the Queensland market, because, you have the legislation where you can't push rent for a full year, which is great. It's also taken into consideration the cash flow of that property potentially being in a massive deficit with the low rent. So that sometimes gets factored into the negotiation of a sale. And I think importantly, that's where you can't really compare apples for apples.
Yeah. So I guess, look, in summary, what we're saying here is you've got to do a little bit more digging than just looking online and seeing, property sold a couple of streets away 3 months ago for X price, therefore mine should be X price. You've got to speak to property managers. You've got to speak to sales agents, and quite often agents outside of the deal that you're currently on.
Key.
Right?
Yeah.
So
I think
PMs, property managers, sales agents are key. Even speaking to some of the building and pest guys in and around the area that you're looking to buy, they can give you little bits of insights here and there. They might not, but they also might, depending on how you handle the conversation, right? So you've got to do more than just looking online and just comparing, 3-bedroom to a 3-bedroom. It doesn't work that way.
Yeah.
There's far more detail with it. So if you're out there and you're doing it yourself, one, word of warning, I think I would say, is that if you're doing it yourself and you're dealing directly with the agent, they can sometimes skew the perception. So they might go, you might ask, what's the, why is the property price the way that it is, or whatever you might ask, and they might give you a comparable sale that they've cherry picked, which is often not really relevant, but it might have had a higher sale price, and therefore they're justifying the price for their current property with this one here. So don't just take the agent's word for it.
Yeah.
Cross-check their what they're telling you with the proof that you can see online. Check for yourself about what is happening. And as we'd said, look, was the comparable sale? Was it renovated? Is it a bigger land? Is it a better street? Does it have a granny flat? So don't just fall for what the sales agent is telling you. Anchor that in proper evidence, not just the emotion. So pull yourself back. Take a second. Don't lock yourself into anything.
Yeah.
And just take half an hour just to do a bit of background research, make a couple of phone calls and that sort of thing.
Definitely. And I think the how to do it would be important to go through. And it's simple. It's really just getting an Excel sheet, having similar recently sold in the past month to 3 months on realestate.com. Just going through that and seeing in that area, in that pocket on the map, which one is kind of similar, and then putting it on the table and then mapping out exactly sold prices and what you can expect to come to your figure. Another thing to mention, and a massive one that gets overlooked, is flood zone. Maybe you did mention it actually, but I'm just conscious that is always something that comes to front of mind when we're looking at areas like Brisbane and regional Queensland markets.
Yep.
That's a huge one.
It is important, and I think maybe just to give the context to the viewer, you might see online, you might actually see for sale, or maybe has sold properties, $100,000 cheaper that might look even nicer than the ones you're currently looking at. Chances are, if you're in Queensland and it's $100K or something cheaper, it is in a flood zone. You can check this online. All you got to do is just Google the council and whatever Ipswich Council flood map.
Interactive mapping.
Each council generally has their own flood maps. You can plug in the address. You can see if the area has been previously flooded or if it sits in a flood risk area. You can see all these sorts of things. Very important. We've kind of just talked about it, but I want to just kind of come back to talk to people on the ground. If you're doing it yourself and you're outside of a buyer's agent, like the people on the ground are the expert, and not just the sales agent, like I mentioned. The building and pest guys, the property managers, agents outside of the deal you're looking at, even the agents that you're talking to, right? They often know the why behind the numbers, particularly the property managers. These are an untapped resource that I don't think people use as much, right? They might tell you, hey, yeah, that area is a real dodgy part. It's a nice street, but that particular area there on that part of the street, there's a dodgy family that lives there. There's always something going on, or whatever it might be.
Yeah.
They might understand why a property took 90 days to sell. They might give you that information, and hey, there was an issue, or maybe there's a tenant issue, whatever it might be. Or maybe a buyer has overpaid because they wanted to live closer to family and they were happy to pay 10, 20K over so they could secure the property. There's so many reasons why properties sell at different prices. And you've got to ask the questions as to why.
Yeah.
So important. And that's the kind of context that you can't find online. You can't Google these sorts of things, right? You've got to ask. You've got to pick up the phone and ask.
No, definitely. And I think also to your point is understanding, with paying for a property, often the price of not getting into the market costs more than just waiting to squabble over a couple $1,000s. As you said, the market moves sometimes, especially in the markets that we're purchasing, sometimes they move by 10, 15K per month. So, you know, as you see that move, it's like, all right, each week, each month that you're waiting to get in costs you money.
Yeah, we're going to get into when it might be okay to stretch beyond sort of fair market value in just a second. But obviously the people side we've spoken about, but let me sort of get into the data, the market knowledge, and if you're playing along at home, like what you can look at, because quite often it's not just, like we've said, going onto realestate.com and just looking at what's recently sold or what's available. When I'm looking, or when we're looking, is looking at least 3 comparable sales in the area. And what we are looking at with a comparable sale, land size is obviously important. You want to get that as close as possible matched. The configuration of the property, is it 3 bedrooms comparing with 3 bedrooms? Is it 3 bedrooms, 2 bathrooms, 3 bedroom, 1 bathroom, 3 bedroom, 2 bathroom, 1 car, whatever it might be? Match the configuration, because that is critical. But not just there, you want to actually look at the property if you can see that it has had any renovations. And sometimes the pictures are old, so you can't really, but sometimes you can. And you can see, hey, this property's been renoed, or maybe it's just had fresh carpet, fresh paint. Maybe it's had a full reno, you know, a full gut and restore. If you can't find those things out, property managers, sales agents can definitely help you. So you want to get at least 3 hard comparable sales like for like. And I always say you want to get them within at least a month, or sorry, at most a month from when you are currently looking. If it's not possible, because some markets there's not a lot of sales happening in the area, so you don't have a property that's sold comparable in the last month, you can stretch it. But this is where you have to then index the sale price, because to your point, a property from 6 months ago, there's a high chance it's sold for, 50, 60 grand less than what it would currently sell for today. So here's a little tip for you. If you are looking at a property that's sold, 6 something months ago, is to index that sale price. So how you can work this out is you take the capital growth for the year, right? You divide that by 12, and then you get your monthly capital growth figure, right? Then you just times that by how many months ago the property sold for, add that to the sale price, and you should have a rough estimate of what the property would have sold for in today's market. But that does not mean that it is got to be like for like. It is just to give you an indication.
Yes.
It is not, like I said, an exact science, and therefore the property, your property must sell for that price. That's not how it works. It's just to give you a rough guide, right? Very important. We want to then look at, things like zoning is also another important one.
Yes.
Right. A property that might sit in a particular zone might have been
low residential versus mixed. You just want to make sure that.
But what I'm saying is it could have been more expensive because it was in a particular zone, or it could have been cheaper because it was in a particular zone. You want to know what those things are. You also want to know, does that particular block, it might have had subdivision potential. It might have had granny flat potential. Is that comparable to the property that you're looking at? Because just because it's got the right land size doesn't mean that it might have subdivision potential, because there could be easements on the property. You might not be able to build a granny. Correct. This is where we're going into the
deeper
micro detail, because this is important, right? If you want to value a property, these are the things you're going to have to look at. And I think this is local sentiment and understanding the stock levels on the market. This is important because I had this come up last week where a market, 6 months ago had a very, very tight supply and therefore prices were obviously selling at a bit more of a premium. The market had a bit more supply on the available, and therefore there's more supply, so the demand then starts to soften. These are all things that you've got to look at and pay attention to when you are assessing the market that you want to go into, particularly the property. And understanding these sorts of things is honestly, I just dropped a whole bunch of gold. I know it was a lot probably for some people, but that's what's going to give you the edge over buyers. And that, combined with looking at the people side of things, is what is going to make sure that you don't overpay for a property. I think it's as good as I can probably
I
make
think
it.
the only two things I would piggyback off that is also looking at the construction type of the house, age of the house as well. Obviously pretty obvious.
Yep.
But those two things do make a big difference. Someone comparing a brick house to like a weatherboard house is kind of not, it's kind of similar, but not 100% the same like for like comparable. I think that's an important one. And then also to your point, when you're looking at the data, understanding, when some deals come alive and online, often, buyers pull out because of finance or building and pest. So that puts the property on the market and then has more, I guess, you've got more negotiation power sometimes at that point because the seller's been waiting for ages and they want to make something happen. So those are also two variables that also
100%. Yeah, no,
contribute.
It's a great pickup. And so you mentioned a few minutes ago, like, when is it okay to stretch above market value? And I might just give
yours
kind of take, and then you can kind of color that in a little bit. As a, I guess, I wouldn't say I'm a professional investor, but I'm a property investor that's been doing this for a long time. We've got a portfolio where, I don't know, what is it now, $9-10 million, something like that, right? I've seen a lot of properties come and go. I've seen a lot of markets come and go. And what I know of the market right now, what I know of the market is I would much rather be in the market than trying to wait for 6 months to then find the right deal. So with the knowledge that I have and the experience that I've seen, I'm okay paying slightly over market value for property because I know that I'm buying in a market that is going to grow. I know that, the market is going to far outgrow what I'm currently going to pay for it, right? So 10-20 grand over, I'm okay with. I obviously want to get it as little as possible, but if you're looking at home, here's some areas or questions you might ask for you to decide if the upside justifies it. If the property has dual income potential, whether you can split, upstairs, downstairs, maybe you can add a second dwelling on the back of it. 5, 10, 20 grand in the scheme of things with that property honestly, it's going to be peanuts in the long run. You might as well secure the property now. It's got the potential to unlock. You're going to unlock the growth and the cash flow from a property like that. If the property that you're looking at is unique and it is scarce, meaning it doesn't, areas around it doesn't have what this property has, hey, that's when you might want to jump on it and secure it. And again, paying slightly over fair market value might be something that you might want to consider. Massive land size. Land is everything. The value sits in the land. We always talk about it. If it's got an exceptionally big land size comparatively to other properties in the surrounding area, that's one that you want to be looking at and paying attention to, and potentially, bidding 5-10K more, whatever it might be, to outbid the other guys on it. Or like we have done at certain points in time, if you're solving for time, like you just want to get into the market, you've got a project
Deadline.
that you've got a deadline, you've got a project you want to complete, you need the property rented out. We've been in situations like that before and bought, paid over market value, and I remember being like, fuck, I think we fucked up here. But like, a couple months later, the property,
grown,
far outweighed what we had paid for it. So if you're going to pay over the comparable value range or comparable value sale, you've got to be clear on the reason why. Don't just do it out of FOMO.
Yeah.
Right? There's got to be a specific reason, and don't guess what that number is. Like, map it out, like model it, make sure it makes sense for what you're trying to do. Make sure there's a feasibility study to go, hey, if there's a dual income potential here, I'm going to reap the rewards on the back end.
Yeah. Yeah. No, I agree with you. I think I'm a little bit more conservative in the sense of it would really just depend on when I'm doing that in my journey. If it's my first property, my 2 cents here is that I want as much equity from the jump as possible. So I think it will differ at every phase in your journey of accumulation.
Yeah. When
it's your first property, though, the key is to get as much equity as possible in the shortest period of time. So I think the abundant mindset for those people instead of FOMO is very important when you're growing and building out.
That's some solid advice, people.
Sometimes the cost of the deal and outweighing other potential options, you've got to weigh that up. So yes, you're right. If there's a banger deal, you know, it's ticking all your boxes. Sometimes it is worth paying a little bit more for. But in some scenarios, if you're looking strategically at your goal and the bigger outcome and you're not, you know, particularly married to any like configuration or anything like that, look at the numbers. I think that's my 2 cents.
No, I love that. And it's, yeah, there's actually a lot of gold in that there for people. And I think maybe just to give the context of what I was talking about again, I was talking about it being an investor where we have a portfolio, where we have done it for a long time. We know markets reasonably well, but 100% to your point, if it's your first property, definitely steer away from overpaying or anything like that, or stretching above market value.
I don't know if this is a cheeky thing to say, but I'm going to say it anyway. I do notice with buyer's agents, they do over offer on properties, knowing full well that they're going to come down on building impairs. Now, I don't actually believe this is an ethical thing to do, but that is some tactics that some people do use, and these are the people you're bidding against as well. Now, I personally wouldn't go down that strategy because I'm always conscious, you know, what if something doesn't flag? You've put your buyer in a really shitty position. Yeah. So there will be different people that you're bidding against, owner occupiers, other buyers agents, and that's also something to keep in mind. And sometimes it's better to cut your losses.
100%. Those types of people. There's a saying out there in you know, service industry land. They've got commission breath.
What's that?
Where they just want to, like, either the BA or the SAT, they just want to get a deal done. They don't really give a shit about the client. So they're like, oh, let's just fucking overpay for it. And they just want to collect their commission, right?
I like it. That's messed up. That's
you don't want to have commission. Bro. That
stinky.
Sucks. I think one of the things I want to round head is don't it's hard. Don't obsess over the perfect price. At the end of the day, there is no such thing as the perfect number, because the how you got to look at it is that there's a range in which the property is bought fair at a fair price. There's a range. It's not an exact, it's got to be this number or that number. It sits within a range, right? Now, obviously, as buyers, we want that range to be on the lower end. The sales side wants it to be on the higher end. So there's a balance, right?
Middle.
My take is if it hits your strategy and your cash flow goals, and it doesn't blow out your serviceability, move on the deal. That should be your, okay, does the deal make sense? We always talk about the numbers. That's making the numbers make sense, right? Yeah. The yield works, cash flow works, I can manage all the expenses, it's in a growth area, ticks my strategy, let me go. Right? That's how you should be looking at it, not, you know, obsessing over, you know, overanalyzing it and, you know, trying to squeeze $5,000 less than what you pay for it. Man, if it's $5,000, the cost
it actually doesn't make much of a difference.
It doesn't in the long run. Like, I always encourage people to build a little calculator in Excel or whatever and just work out in a year from now, what is that property expected to be worth? Now, I know properties don't always go up in value, right? But if you've done your research, you're buying in the right market that is, there's quite often the property's going to be worth 50, 60, 100K more than what you're currently paying for it. So $5,000, it doesn't fucking matter.
But also, though, more importantly, the cash flow repayments on that mortgage for $5,000, it is like
nothing.
It's nothing. It's like maybe even $10, $20, if that.
Depending on your deposit
all
and
of that.
Whatever.
But like,
the
when I'm doing the calculations and you add on, like, obviously if you add in tens of thousands, it's going to make a difference. But for a couple of grand to make the deal work, it is worth it from my perspective. You were saying something, and it's actually just made me think of something, how interesting the psychology is of the whole thing. Because importantly, like, I always think about it when you actually go to the shops, maybe clothes shopping or handbag shopping or whatever it is that you're buying, car shopping even. Both a Toyota and a Lamborghini can get you to the same place, right? It's just making sure that you understand what is the purpose of this thing. why am I getting it? And keep coming back to that, because if, you're looking at a suburb, you're going to have $100,000, 500K properties, 700K properties, 800K properties in an area. I would always recommend, if you go to the bottom end of that market, you've got room to grow to meet that expectation as well. So if you're growing your portfolio and in a position to, just get in, I think that is the key, because once you have the first one and the second one, you've got that momentum for growth and compounding to happen with time.
100%.
I hope that makes sense.
Yeah, no, it does. Basically, in summary, just get into the market. Don't fucking wait. Get into the lower end, ride the wave to the top.
Ride the waves to the top. That's what I'm trying to say.
Take the elevator to the top. So valuing a property is kind of like playing poker. The numbers give you the odds, and you win by reading the room. I was trying to be clever.
I had my analogy. Now you just added one in.
What was your analogy?
That it's like cars.
Yeah, I can see why. It's kind of like cars.
But tell me why it's like poker.
Because the numbers, doing the knowing the data and the numbers, right? It gives you the odds to win.
Oh,
but
right.
Knowing, but by knowing people, by reading the room, that's how you win.
Yes.
Right. So the people reading the sales agent and the seller, understanding what they got going on, understanding, hey, maybe I've spoke to the PM over here and got the building and pest guy giving me some knowledge here, and there's another sales agent that is not related to the deal giving me some insight here. So reading that room is what's going to give you the advantage, as well as obviously having the data and the knowledge.
Yeah, true. Because bottom line is, property investing is a gamble. It is a risk, but you've got to take a calculated risk with it. Make sure things are working in your favor and protect yourself is the bottom line. So
protect your neck at all times.
In light of that, I think the how to have we answered the question?
How? I'm pretty sure that's what the whole fucking episode was.
Yeah, I know, but in a summary, maybe just summarize it. It's just basically, you're looking at me like
I'm not summarizing everything I just spoke about. So no, people, all right? People tell the story, right? I just fucking told them that. People tell the story, speak to different people about the deal. Get the data and as much of it as you possibly can. I told them about, it's not just three bedrooms. There's all these other bits of information you got to know. Is it renoed? Is there subdivision potential? Is there any easements? The whole thing, man.
Episode was. We went on a tangent.
You went on a tangent. I don't go on tangents. You
started talking about poker.
Yeah, well, you started talking about fucking Toyotas and shit. I'm like, what the fuck's wrong with you, man? Toyota, fucking what? I feel really cool with this iPad, by the way. I just thought I'd throw that because you can probably see it on one of these cameras. If you're sick of, just doing it yourself and you need some people to do it for you who are actually property investors that know a thing or two about property, hit us up, smashpropertyinvesting.com.au. Actually, just send us a DM. Send us a DM on Instagram or just Instagram, because I don't check anything else. Personally, we have
no, on YouTube. This would go out on YouTube and
you might see it on a short.
Oh, okay.
You might follow us on Instagram.
Okay.
Or just give us a call, 0452046274, and say, I need help finding a property. Because we do it all. Like, we don't just find you the property. We negotiate on it. We help you through settlement. Get the building and pest coordinated for you. Get the property manager in line so you can get a tenant. It is the slickest, smoothest process you could ever imagine. Every single client that we work with can't believe how quickly we can get this done for them. And the important bit is how good these deals actually are.
Yeah.
That's the most important thing. Like you said, we want to get equity so we can just rinse and repeat that stuff. That's what we do. We're not a high volume tick and flick burn buyers agency. And I'm happy to say that we've stolen some clients from some of the bigger BAs, which I'm fucking, I like that one. I'm talking about you. That's all. Thanks for watching. Till next week, Smash Property Podcast. If you got some value, appreciate it if you could like the video and consider subscribing. Till next time, adios, amigos.
Thank you.